Welcome back, guys, to another video. We heard some great news on inflation this past week. Inflation came down to 6.5% in December 2022 compared to the 7.2% in November 2022. However, we heard some bad news on housing stats, with November and December being record low months on housing sales. Now, question on a lot of our minds: where will home prices go in 2023? Will home prices drop in 2023? And where is the overall housing market headed? So in today's video, I'm going to talk about the Bay Area housing market, and we're going to look at local housing stats in the Bay Area to answer that question. We're also going to look at the Sacramento market and see and make some conclusions on where is the overall Northern California housing market headed. Now, if you are not in these markets, this data on the board may also translate to your local market, so you definitely want to stay tuned. So let's get started. So today we're going to focus on three different regions of the Bay Area. So starting, we're going to talk about the South Bay Area, and in this section I cover primarily the cities of Sunnyvale and Cupertino, which is the heart of the Silicon Valley. And then we're going to talk about Fremont, and then over there we're going to talk about Sacramento. Now, it's really hard to cover all different areas and all different cities in one video, but I've picked out cities that are desirable, where people are flocking to and moving to give you a really good understanding on the cities that are popular in the area. Okay, so let's get started. So we're going to look at the number of units sold. We're going to compare, again, this report here is for the month of December 2022, and we're going to compare it to the month of December 2021 to see what has happened. And just to put this out there, real estate is a lagging indicator, so it's not like the stock market where it's so volatile. So what's happened in the mid months of 2022 is what's resulting in now in December and November. So we're looking at the month of December here for this report. Okay, so we're going to look at the numbers sold. We're going to units sold. And we're going to look at the average sales price. We're going to look at the days on market, sales price versus list price. And we're going to look at the inventory. Okay, so on top here, as you can see that this past month, December 2022, 34 homes sold, compared to 77 in the year prior, December 21. And that is almost a 56% decrease on units sold. Now, another point I want to make here is these reports that we're talking about today are for single family homes only, detached homes. We're not talking about condos and townhouses. Now, this data that I have on the board is directly from the local MLSs from these regions, so you're getting timely and live data. Okay, so and then moving forward, we have average sales price. The year prior, average homes were selling in this area, single family homes. The price here in Sunnyvale and Cupertino was $2,661,000 compared to the $2.181 million this year. When I say this year, I'm talking about December 2022, almost a 18% decline in average sales price. Then we have days on market. Homes were selling and turning in 11 days. Now they're around 25 days. Going down, we have sales price versus list price. What that means is what the home is listed for, then what does it actually sell for. So back in 21, when rates were very low and there was high demand for homes in these areas were selling 20% above list price. Now they're selling about, on average, 3% below list price. Inventory, we all know this. It was a crazy time. There were about only 0.2 homes according to the demand monthly, and this is portrayed in a monthly figure. So not even a single month available for the demand. Now we're at 0.7, which is we're reaching 1 month of inventory in the month of December 2022. Now we're moving forward to Fremont, which is another city in the East Bay area of the Bay Area. It's a really desired place because of schooling. The school ratings are very high here, and it's centrally located. This is also where Tesla makes a lot of its cars. And so looking at the numbers here, we're looking at the same numbers across the board here. So numbers sold in December 2022, which was last month, 44 units sold compared to 95 the year prior, a 53% decline in units sold. And then if you look at the average sales price, Last year, when I say last year, December 21, homes were selling at 1.74 million, and now average home price that is 1.558 million, a 10% decline there. Days on market, homes were turning in about 16 days in December 21, and now they're selling in about 22 days. List price, sales price versus list price, homes were selling about 12% above list price, and now homes are selling around 3% below list price when they're listed, very similar to the Sunnyvale and Cupertino markets. Now, inventory was very, very low. Like I just mentioned earlier, this is portrayed in monthly figures. So you didn't even have half a month of supply. You're looking at 0.1. And now that number, very similar to the Sunnyvale market, is reaching close to 1 month of supply, 0.7. Now we're moving forward to the Sacramento market. And remember, guys, in this market, I'm not covering the metropolitan areas. Midtown, downtown is not covered. I'm covering the suburban areas of Sacramento. These are the cities below that I'm covering in this report right here. So let's move forward. Okay, so in this market, in the suburban areas of Sacramento, we're seeing that 480 homes sold in December 21. And this year, in December 22, only 295 homes, a 38% decline in units sold. Now, average sales price the year prior was $660,000. This year, $637,000, a 3.5% decline. Homes were turning in about 18 days the year prior. Now it's about 50 days. Wow, a staggering number. We're going to come back to this in a little bit. Let's keep moving. Homes were selling about 1% above list price. This year, homes are selling around 6% below list price from where they're listed at. Over here, the number is, it was about half a month of supply in 21 compared to demand. Now compared to demand, you're looking at inventory and we're reaching almost 2 months of housing supply in the Sacramento suburban areas. If you are getting real value out of this video, please show me some love and subscribe to my channel. And don't forget to hit the bell icon so you know the next time I post my next video. Thank you for watching. I love you all. So now that we've looked at the local data for the South Bay area, East Bay area, and the suburban markets of Sacramento, now let's connect the dots and see what kind of trends are happening and what's going to happen moving forward. Okay, so as we can see across the board here, that units sold in every single market we saw a decline. So the main reason for that is plain outright is the mortgage rates being high and a lot of buyers and a lot of borrowers just being priced out of the market. Another reason for that could be fear. A lot of people that may be qualified to buy are just sitting on the sidelines because they're fearful of the unknown. There's a lot of volatility in the market. The stock market has seen double-digit declines. Overall, you know, cars are not really selling. Other markets are doing bad. Groceries are very expensive. So a lot of people are just afraid of the unknown, and you're seeing that right here where demand was crazy in the last 2 years, and in 2022 it really came down. And the main factor of that is because the rates going up and people just not being in the market due to qualifications and also due to fear. Okay, next you see average sales price. 18% decline here, 10% decline here. What's happening? So the number one reason here is that, as you saw down here, where homes were selling 20%, in some markets even 30% above list price. And that is not happening. Now homes are selling 3% below list price, 3% here, 6% below list price. So that is what's contributing to the average sales price not being as high as it was the year prior. Another reason is that the luxury market really is not in fashion right now. Now, luxury market is usually defined as a top tier market, the 5% of any of these markets. So in these markets, in Sunnyvale, the luxury market, maybe the homes that are 5 million, 4 million, maybe in Fremont, and 800 to 900,000 in the Sacramento suburban areas. Now, when rates go up, your payments skyrocket if it's a really high loan amount. So that's why homes that are luxury homes are just not selling, or they're taking a long time to sell. They're just not in fashion. So that's one of the other factors that you're seeing here why the average price is lower prior. So don't confuse this with prices coming down, because we've yet to see a significant price drop in homes in the housing market on a national level. Even here locally, the numbers that I'm talking about. Now, no one can predict exactly What's going to happen? We're going to talk about that in a second, but that's not the reason why you're seeing average sales price being lower. Okay, moving forward, you see homes turning in about 11 days, 16 days, and 18 days there, and 25 days, 22 days. I still think that's a fair number. It's not bad. Homes are selling, they're still turning. Here's where it gets crazy, where it's just a big difference. In the Sacramento area, homes are sitting on the market, and this is a stat for December, 50 days before they sell. That's a crazy number. We haven't seen that in a while, right? So that could be alarming. And I compared that number to also for the month of November 2022, and I was sitting at around 40 days. So an extra 10 days were added, and you can take into account that we're in the holiday season. A lot of people are not selling, a lot of agents are not working, and market is just generally slower in the months of December, but 50 is an alarming number. But and if you can remember from the past recession and the past market crash, when things go sour or sideways in the Bay Area, the markets that are around the areas that are touching the Bay Area, like the Sacramento market or San Joaquin County, Tracy, and those markets, and on the other side we have Gilroy, those markets really get hit hard, and you're starting to see that in the Sacramento market. Now, homes are still turning, like I mentioned here, but they're selling a lot slower there. Okay, and then we have the next stat, which is the sales price versus the list price. And that's what we just talked about, just overall low demand, not a lot of demand out there in the market for sellers that are trying to sell their property. And that's what you're seeing here, that homes are not selling at list price. They're actually selling a little below list price. All right, the last stat, inventory. So again, these two are connected to each other. Inventory is increasing because there's less demand and homes are sitting on the market longer. So you're starting to see 1 month of supply here, 1 month of supply here, and almost 2 months of supply in the Sacramento suburban areas. Now, my perspective and my thoughts, I have three main factors I want to talk about here that come to my mind and my heart after talking about this number. Number one, inflation is trending downwards. The Federal Reserve is doing what they said they were going to do, and it is working. As we see, the inflation numbers are coming down. They were at 9% in mid-months of the middle of the year in 2022. They were around 7% in November, and now the number in December was 6.5%. And they're targeting to go to 2%. So if lenders start to adjust their margins in 2023, because now that the Federal Reserve they feel that inflation is starting to come down, they might, take their pedal off the gas and not do crazy hikes in the next meeting that's coming, maybe do a smaller hike, and then lenders adjust their margins and the rates come down to the mid fives. We may start to see that people start to adjust to the new market and more buyers have trust in the market and start coming back in the market. Now, the rates at 5.5, these rates were the same kind of rates that you saw in the early 2000s. But the difference is that home prices were significantly lower in early 2000s compared to where they are right now. They're significantly higher. Like I mentioned, home prices have not yet fallen. So this is a big problem because income has not risen at that same rate. So home affordability for the average man in this country is out of reach. So that's going to be what's interesting to see, what these rate hikes do and how we adjust to the market moving forward in 2023. Like I mentioned, real estate is a lagging indicator. It's not something that happens right away. So it's very important to see what's happening now and continue to watch the trend and continue to see what happens as we move towards the mid-months. Number two, we're starting to see inventory increase. We saw it. It's almost reaching 1 month of supply here, 1 month of supply in the Fremont in the East Bay area of the Bay Area, and almost 2 months of supply in the Sacramento area. Now, we know the demand is not where it was the year prior, so that's why you're seeing that happening. But even where the demand is right now, we're still not, like in these markets, we're not even at a month of supply. It's just because inventory is still short. Now, sellers that need to sell in these markets, in the markets of Sunnyvale and Fremont, we noticed that homes are still turning in 25 days to 22 days, which is a great sign for sellers. But for buyers, the home prices, we have still yet to see what happens. But if the inventory starts to increase and homes start to sit on the market longer, like we're seeing in the Sacramento market, And the sellers are not able to really turn their homes as quick as they want to, because in some cases, a lot of sellers need to move out of the state, or some sellers are maybe they're getting a divorce, or they have to sell. These are the type of sellers that are really selling, or there's an investors that want to liquidate, because sellers that have bought homes in the last couple of years and have locked a really low rate. Those guys are not really selling because they're thinking, well, where are we going to go buying a home at 6%? So you're seeing less inventory. But anyhow, those sellers that need to sell, but there's not enough demand to buy, you'll start to see that there may be downward pressure on home prices, and home prices may start to come down if there's just not enough demand for buyers to buy the homes for sellers that are on the market right now. And I talked about this in my last video, that it's very difficult to predict a marketing cycle. You never really know if it's the bottom of the market, and you never really know if the market has peaked, especially when you're sitting up on that top euphoric stage where we were in the last year or 2 years. We don't know if this is the top and it's going to start to come down. So if you haven't checked that video out, click the link above where I tell you how market cycles work and what are the factors that go into a market crash. So check that video above. Moving forward, my third point is going to be, which I've talked about in that previous video as well, is the X factors, where the X factor here is the job market. Now, we have yet to see a mass level layoff happening throughout the country, but we've seen companies lay off 20,000, 10,000, 5,000 employees. Well, mind you, a lot of these companies have like millions of employees. So there hasn't been a ripple effect on a mass level where, we saw people just are not able to make their mortgage payments. For the most part, the people that were laid off were able to recuperate their jobs, and we still have record low unemployment numbers in the United States. So this is going to be very interesting to see, because if that number changes and unemployment starts to go up, then the dynamic here may change. That's why I call it an X factor. And right now, inflation is at 6.5%. The target for the Federal Reserve is 2%. We have long ways to go to get to 2%. Their purpose is to slow down everything, slow the supply of money, and they're doing that, increase the cost of borrowing, and they're doing that. And what we're seeing is consumer spending has gone down. A lot of companies are not doing as much as marketing and advertising as they were, because what happens when this kind of stuff happens, companies start to cut costs. People in general have less money in their pockets, and they're not spending as much. Car sales have come down. A lot of things are happening in the economy. So when that starts to happen, it makes me wonder, well, if that continues, are there going to be more layoffs? How many layoffs are there going to be? Are we going to be able to recuperate? So that's why that's an X factor, and it's going to be very interesting to see what happens in this year. Like I mentioned earlier, nobody really knows what can happen. It's really hard to predict the market, so it's really good to look at the local data, look at the market stats, talk to real estate professionals, and stay in touch with what's happening in your market. National Association of Realtors projects that nothing is going to happen in 2023. They believe that it's just going to be one of those years where there's no appreciation, there's baseline, it's flat. At Realtor.com, however, just put out an article stating that they believe that home prices may appreciate around 5.5% year over year. Now, nobody really knows exactly what's going to happen. Real estate is not volatile as the stock market. It's a lot slower. It's a lagging indicator. What happens now, you'll see the results of it in the next 3 to 6 months. So it's very important to watch the market. But I believe that if rates start to come down to the mid fives, a lot of buyers may get adjusted to that. And we may not really see much appreciation this year, but we might start to see some buyers come back in the market and have more faith in the market, and markets and homes start to sell. Now, it's going to be different depending on where you are in your local market. I believe there will be opportunities to be made, like the markets are different here. If you're in the Sacramento market, you may be able to get a home that's sitting on the market a lot longer. You might be able to negotiate with the seller and get a lower price, but we'll have to see how that pans out moving forward, because we have yet to see prices drop. So what should you do? So you should definitely know your local numbers. When I say local numbers, what are average rents in your area? What kind of rent are you paying, and what is the mortgage going to be? In the Sacramento area right now, for an average When I say average, a 1,500 square foot, 3-bedroom, 2-bathroom home is renting in these suburban areas around $2,500. Now, if you were to buy a home, which is a 3-bedroom, 2-bathroom area in one of these cities for $450 with 5 to 10% down, with everything included, you're looking at around a $2,600 to $2,700 mortgage payment. In some cases, it might be $2,800. It's very close to the rents. In some cases, it might even be lower than the rents, depending on what your purchase price is. So you definitely want to run the numbers and see where you stand. Now, in these markets, in Fremont, average 3-bedroom, 2-bathroom home for a 1,500 square foot is renting for around $4,200 to $4,300. In the Sunnyvale area, $5,000. Now, also, per capita income in these areas is a lot higher. So there's a difference here. So you definitely want to run your numbers with your professionals and know what's happening, and watch videos like this, read articles, and stay informed. And that is all I have for today's video. I hope it was insightful. Until next time, this is Karan Singh.